Welcome back to Liquidity News. My name is Harrison, and what was that? We have some breaking news. We have currently right now a retail trader trading what? A bullish flag. We have a retail trader trading a bullish flag. What's his name? His name's James. James. We're gonna go straight to the scene right now to speak to James. Hi James, can you share some of the things that you've seen happening right now? I'm trying to get some food, bro. I done saw a bullish flag, and you guys know a bullish flag is a continuation sign. So I had to call my boys and we just told everyone to jump in at the break and retest. And you know, we caught a good one too, but the team came back and hit our stop profit. But some of my dudes did close out and that. You know, they're Gucci, but I'm a bit zealous, so I was just trying to go for too much. And
back to you, Harrison.
So guys, there you have it. You just heard from James right now, currently trading a bullish flag. What was that? More breaking news? Guys, we have Anthony, who trades institutional concepts, who was also trading that day. Here's what he has to say. Anthony, can you share how you treated that bullish flag? Yeah, sure, I got you guys. Yeah, I saw that bullish flag. That was like a retail concept thing. But the moment that opinion was created for a continuation, I knew that retail traders would be waiting for a break and retest to take it to the upside. And shortly after the price gave them that, I then took it to the downside to target that liquidity.
Back to you, Harrison.
I know.
Harrison, we are live.
Talking about? Yeah, I'm coming
Harrison,
home.
we are
Don't
still
worry.
live.
Don't worry about me.
Harrison,
I'm coming home.
live.
We just heard from Anthony, who's currently trading it the opposite way. We currently have MHUFX on standby, who's going to break down what he saw that day.
So you guys have been seeing that I've been in GU sells, GU buys, like literally all throughout last week. And I just want to share with you guys why I was selling GBP/USD on the latter part of last week. Once again, I'm going to put this out there. Don't be giving me stick for what I'm about to share with you guys. I'm just sharing with you all what I'm seeing on the charts. I have nothing against retail concept traders. I'm going to be breaking this down anyway. I'm also going to share with you guys what I believe retail concept traders would have been seen at the time as well. I've got my annotations off right now. You are going to see some lines pop up, but don't worry about those lines. That's for another video. Okay, here we go. We got my annotations on the chart right now. Nothing much, but like I said, there are lines in here. These aren't indicators or anything like that. It's just the line tool, which is here. So for you guys that don't know, this one right here, the vertical line tool, and I just put some text in it. But I'm going to be breaking down what happened last week. This is what I believe retail concept traders would have been seeing on GBP/USD. I post all my trades on Instagram. If you guys want to see my trades, go to Instagram. I post mostly Monday to Fridays, so you guys can see the trades that I'm actually in. I don't share every single one of the trades, but I do share trades that I might potentially speak about on YouTube. What I believe retail was seeing was this. I believe that they were seeing a bullish flag. And I've just put on the replay mode real quick just to show you guys what I believe retail was seeing. I believe retail traders were seeing a bullish flag towards the latter part of last week, especially seeing this massive buy-in last week. When they saw this big push up to the upside, this massive push up to the upside, this would have been some kind of engulfing on whatever time frame that they're looking at, engulfed every single one of these candlesticks over here. We've run out these highs and now they're thinking about buying. And so what did they get after this massive push up, which is some indicator for retail that price was to go up to the upside? They also got a bullish flag. And you guys know about those bullish flags. That was one of the retail concept patterns that I learned when I was doing retail trading. It was busting sometimes, but I couldn't bank on it because I would wait for that break and retest and it would never ever get to my full target range. It didn't work all the time. It wasn't reliable. This is one of the many different patterns that you will learn as a retail concept trader. And look, not by all means, it's going to work sometimes. It might not work sometimes. A bullish flag is a continuation sign. What retail concept traders would have been waiting on right now is they would have been waiting on some kind of break and retest of this flag to take it back up to the upside. I'm in a 1 hour time frame. This is where they get their break. They get their break over here. So in other words, price is broken out the flag. So now it shows signs that it wants to go up to the upside. Once price is here like this, once you get a little wick out here, this is when retail concept traders would have gone down to a lower time frame to catch some kind of entry. And so technically they like to go to the 50-minute time frame. So we're on the 50-minute time frame now. We see the break out of the highs. This is the breakout of the highs. Some people would have jumped in here out of the break because there are breakout buyers. They would have put their stop loss beneath this low. They'll be Gucci with that. Hit play one time. There we go. So now I've hit play a couple more times and now you can see it clean as day. Look, price is broken out. They've come down to retest this bullish flag and they've given us a buy candle, and so this would have been their sign to go long. And if he was really zealous, you know, they're going to put their stop loss, they're going to put their stop loss beneath this low, or if they're going to be extra safe, they will be putting it beneath this low, or in general it might just be 30 pips. So let me bring up the ruler tool to show you guys where that would have been. So from this very high, 30 pips would have been roughly about here, okay, roughly about just midway point around here. So in other words, we know that they generated this pattern, or they created this opinion. This opinion gets people thinking bullish, and so that means more stop losses are going to be placed beneath these lows, and price does go in their favor for a couple of pips. Price does rise about 38 pips, which is good, which is decent. And if you're close at that point, by all means, that's blessed. You're Gucci. There's some retail traders who take 30 pips, takes 20 pips, and they're nice to that, and they're blessed with that. The majority of retail traders I know don't just want 30 pips, they want a lot more than that. So they are going to be holding on at this point. And not only that, look, whenever you get a break and retest of a bullish flag, normally you would target the very high. They'll target the high of it, because if this is where price bounced off from to come lower, this is where they want to target again. So they'll be looking to target this if they've not taken partials or closed off their positions already. And then just to show you guys what happened to them, you guys probably already seen it already. There we go. They've been stopped out. Every single person here, when price moved up about 20 pips, they might have moved their stop loss. Maybe 30 pips, they might have moved their stop loss. Or for those who didn't move their stop loss, they would have been stopped out right here, as you guys can see. And just to show you guys what else happened, there we go, prices continue to push lower. So what I'm going to do right now is I'm going to show you guys what I saw trading institutional and SMC concepts. So I'm going to tackle this from two ways. They're all in sync anyway, but I'm just going to tackle it from two ways. The very first one is this. You can see how price is running above these highs. We know that when price runs above these different highs over here and expands like this, we know that price is trading within a premium price. And if you are bullish for whatever reason, if you want to buy a price, I always tell my mentees that every single time, you never want to be a buyer above a high. You want to be buying lower and then take price to that high and then offload your position. What I'm trying to say is that when price pushes up this high, price is at a premium price. Even if you was just looking at this low to this high, you can see prices making these high highs and high lows. Eventually, when it bursts through this high over here and starts trading above here, price is at a premium. You don't need buying price when price is at a premium. So they gave a bullish flag to people, to traders, when price was at a premium price on the lower time frames. You don't want to be buying price at a premium. You want to be buying price when it's at a discount and then taking it to a premium. This is the opinion they gave to traders at that point. There's a bullish flag, which is a continuation sign. Now, right now, it's time to get bullish. And so when he got the break and retest, everyone would have been excited at that point. And then ultimately you saw what happened. Price then reversed against everyone. You want to be buying from a discount and then taking it to a premium, where you offload those buy positions to other participants who are willing to take on the buy. So let me break that down. When people were buying up to the upside, they were done when price got to the premium, when they started running out all these different highs. And so when they close off their buy positions, they actually sell the order back. And in order to sell your order, there must be a counterparty, someone who's willing to buy. And at this point here, when price is doing all of this, when people are getting out of their sells, other people are looking to get into buys because they're seeing a bullish flag. And so the people who are looking to get into buys at this point are literally exchanging contracts with those who are closing off their buys to those who are selling at this point. And those people who were selling were these people who were buying. And before I actually talk about the trade that I was actually in, I'm going to tackle it from another point of view again. I'm going to go to the higher time frame now to look at how you could have treated this bullish flag. So now I'm on a higher time frame than the one we were looking at. We're on a 4-hour time frame right now. This low has been violated. Whenever a low gets violated, you don't need to be sellers beneath lows. And when I say sellers, you don't want to be aggressively selling. You still might get a juicy move, but ultimately you don't want to be aggressively selling beneath this low right here. In other words, you want to be selling from a premium and then taking it into a discounted price. We know price is trading beneath this low and we violated this low. If you want to continue to sell, you don't look to sell beneath this low. You wait for price to trade back up into a premium price before you sell. And how you know when price is at a premium is if you take it from the very high to the very low. We're not using the fib extension as any kind of entry sign. We're just saying that if prices retrace back more than 50% of the leg down, then price is at a premium. And so in other words, what's happening? You got this bullish flag when price was at a premium. That would have been the biggest red flag. Alarm bell should have been ringing in your head at this point, because if you get a bullish flag when price is at a premium, you're in trouble. It's less likely to hold. When you get a bullish sign within a discounted price for buys, that's most likely going to hold than when it's in a premium. So we know that this bullish flag came when price was at a premium price. That would have been another red flag not to buy at that point. Like I did say when we were talking about the retail stuff, it did give retail concept traders under 40 pips, and that's absolutely blessed. That's a blessed move right there. No one should hate on you for 40 pips. I love a 40 pip trade. I love a 30 pip trade still. But I'm just talking about the opinion it gave you guys and why it didn't hold and why it didn't run out this high. Now, when it comes to entries, I didn't actually take a screenshot of the actual trade, but I did take a screenshot of the stats afterwards. Now, guys, when it comes to entries, this is exactly what I was looking at. I'm going to quickly pop down to the 5-minute time frame, And now I'm going to show you guys exactly what I was looking at. So you can see right here, we have a massive up close candle. We have a huge up close candle. Eventually we break beneath the up close candle and then we trade back up into it. The moment they traded up into this up close candle, this is where I'm expecting some kind of reversal sign. You need to get that reversal sign. Some people like to jump in there and then, but really and truly, you don't know where they're going to reverse from. And at the same time, look, this institutional candle is pretty large. So from the very low to the very high, that's around 88 pips. A massive institutional candle. You don't want an 88 pip stop loss. So that's why you wait for some kind of reversal sign. And so I'm gonna hit play just a few more times. There we go. I hit play a little bit more. There we go. The reversal sign you want to see is you want to see whether price can get beneath the short-term low price just created. So this low here was the very low, and then they ran up into this up close candle, mitigating it. They violated the short-term low. They violated the short-term low of this institutional candle, and it's always the short-term low prior to the movement back up that runs out liquidity. And so in other words, what you're seeing up close candles being mitigated and highs not being traded above. They could have traded past it here. They could have done that, and then technically if they had done that, then really and truly you would have targeted every single one of these highs over here. But they never did that. They broke beneath the short-term low, in other words telling you that price wants to go lower. And in addition to all of that, they did it with some good force. You see the imbalances that they've left behind. It means that the larger funds are in this move right now, and so when price returns back to fill in the imbalance, that's when you should be looking about getting an entry. So I'm gonna hit play a few more times. I never entered here because I was pretty slow in the day. I completely missed this setup. And so I decided to wait for the next one. You're going to see it in a minute. There we go. So this one right here, you can see here when they trade back up to fill in the whole imbalance over here. This is why I jumped in roughly about 23.10. And then when it comes to targets now, it's not just about targeting the liquidity beneath here because price is still within a premium. So you expect a deeper run lower. So 1 hour time frame, you can see from this kind of 6 high and that kind of 6 low, they don't trade into each other, and so there's inefficiencies here. And so this is where I'm looking to target this imbalance right here. And all I'm looking to do is take price back down into a discount on the lower time frame. That's it. Price is at a premium. I've got my point of interest. Price is traded up into that point of interest, is mitigated the up close candle, cleaned in any inefficiencies they left behind, and now price is looking to drop back down into what? Into a discount. You take price from a premium into a discount. And so this imbalance is at a discounted price, and so this is where I'm looking to target. I'm gonna go to the 50-minute time frame, and now I'm gonna hit play. There we go. And so it trades right into a discounted price. And how you know price is at a discount, one more time, I'm not gonna do this all the time, but you can see, look at this, from the high to the low, price is trading beyond 50% of this expansion move up. So in other words, price is now within a discount. The imbalance that we identified was within a premium price. And so this is why I took it to the imbalance. And I say this all the time, you don't have to be the first of the party. You don't have to be the first of the party or trying to catch it at the very highs all the time. And at the same time, you don't have to be the last one to leave. You don't have to catch the whole move. Get your piece of the pie and be out the markets. Get your portion and be done. Be satisfied. You're good. I jumped in roughly about 23.10. I took it to 22.20. And I specifically took it here because it was the imbalance. That imbalance you saw on that 1 hour time frame, the very high of it came in at 22.21. And then, like I said, you don't have to be the first of the party. By the way, guys, I did take partials the moment price ran out this low over here. It wasn't a full position that I held over there. And that's one thing I'm really encouraging you guys to do is whenever price runs out some kind of liquidity, take partial profits. Price does fill in the full 1 hour imbalance, but I was done trading from when price tapped into it. So yes, I might have missed out on an extra 40 pips, but like I said, you don't have to be the last person to leave. You don't have to catch the whole move. Do you understand? Get your piece of the pie and be satisfied.
So that's all we have for you today on liquidity news. My name is Harrison Uwa, and like I say before I always leave, always trade towards the money. Hey guys, can we get some new earbuds? These things keep dropping out. Huh? What do I have to do to get some earbuds around here?